The yield on Italy's 10-year bond hit 4.5-year highs. Concerns about the government's budget plans and the potential impact on its debt levels are weighing on investor sentiment. Joining me now to discuss is Vincenzo Longo from IG in Italy. Vincenzo, thanks so much for coming in.
You're welcome.
So, do you expect these moves that we've been seeing in the yields to continue?
Yeah, we expect that the yield continue to raise again amid tension between Italian government and the EU Commission, and ahead of the a possible downgrade of rating agencies at the end of October. So investors are scared about Italian bond. We expect that the yield continue to rise again.
All right, so I want to ask you about a couple of the points you mentioned there. Firstly, that war of words really going on between the European Commission and the Italian coalition. So, I mean, we've heard from Salvini on the one side saying that Juncker is the real enemy of Europe, and then Juncker potentially talking about the end of the euro. How do you think these two sides can potentially resolve their differences?
The fighting between Italian government and the EU Commission will be very strong in the next week, and we believe that before October ends, maybe the discussion was very strong. We believe that the stalemate between the two, Italian government and the EU Commission, can continue well after October ends, and they can decide to reach an agreement of deficit GDP. That could be a little bit, maybe there will be a little reduction of this deficit GDP around 2%, but it's very difficult.
So when we talk about those rise in yields, what's the impact on the banks? Because I know that the Italian banks hold around 370 billion euros of Italian bonds, and that equates to around 10% of their assets. Is there a big risk there? They've already obviously got this non-performing loan issue in the background as well. I mean, could we see further losses for the Italian banks, worsening ratios, potentially capital increases?
Yeah, that's right. A new wave of capital increases is very high probable. We believe that with a BTP bond spread above 400 basis points, could start a new wave of capital increase. And as you say, the NPL issues can contribute to lose capital increase for banks. So CET1 ratio could be below the ECB recommendation, and investors are scared about this event. So maybe it's very difficult for banks, Italian banks, to have a spread so large.
So those spreads clearly widening between Italy and German bonds, but if we look at the spread between Italy and Spain, it hasn't actually widened that much. So does that indicate that it's an Italian problem rather than a peripheral Europe problem, and in that way not that similar to Greece?
Yes, until now it's only an Italian problem because the spread with Spain bonds are not so large like in the past. We believe that the contagion risk is very low at the moment. If you see a spread between Spanish bond and German bond, you can see that it's very stable, so no contagion. No contagion. Italy, it's different from Greece for sure. We are the third largest economy in the Eurozone, so we are very important. The hope that we don't will similar Greece is very important, because if we have the same Greece problems, maybe it's the end of the Eurozone.
So the European Central Bank is due to wind up its QE program, 2.6 trillion euros worth of bond buying. That's due to end at the end of this year. Is that likely to see further pressure on Italy's bond market?
Yes, for sure, because Italian government is going to increase debt, so maybe the net issues for the next year will be larger than 2018, and ECB won't buy any more Italian bonds, so someone need to buy this new risk. And it's very important that we have a good reputation abroad, because a foreign investor can see Italian as a good investment for the next year. So it's very difficult to find investor at the moment with this budget law that the government is going to approve. So it's a very important point at the moment.
Finally, I wanted to ask you about the upcoming European Parliament elections and how that plays into the situation in Italy right now, because it seems as though Salvini and Di Maio really want to try and get those budget rules changed by getting more populist candidates into the mix there, and then that will allow them to have this 2.4% deficit to GDP target, and that will potentially be sustainable if they can get more people on the European side who then are on their side. Is that realistic?
Yes, for EU election 2019, these known as anti-establishment parties could have a good chance to get maybe the majority of the European Parliament at the moment, and it's a very important risk at the moment. We believe that in Italy as well, because if League Party could reach 40% of polls standalone in 2019 after maybe the EU election, we can see maybe they call a snap election in Italy. So we need to keep attention on EU election for a barometer of the anti-establishment party in Europe.
So that's so that Salvini and the League could potentially have a majority in Italy?
Yes, sure.
All right. Vincenzo, thanks so much for your time.
Thank you.
That was Vincenzo Longo joining us from IG Italy. I'm Victoria Scholar. Thanks for watching IG TV, and we'll see you very soon.